If you're a homeowner or you're new to homeowners and you just don't understand what your options are, let's go over how to make sure that you know that your house is insured properly. This is one of those videos that I make just because it's beneficial to you. If there's someone that is interested, and you're going to get a ton of value out of this. If you do like it, let me know in the comments below. This is one of the fewer watched videos because for some reason people don't care so much about homeowners insurance. But if you're purchasing a home, I want to make sure that my house is properly covered. The first piece is knowing the replacement cost. Most people think the replacement cost is what your house is worth. Your house is not including the land, and the house itself loses depreciation over time. So when you think of the value of your home, it can even go up. Our current housing market has gone skyrocketing to where a $200,000 house is now worth $350,000. So there's a benefit in money that has that, but that doesn't mean the cost to replace your house is more expensive. So the replacement cost is the rebuild with the cost of materials, the cost of labor. It's essentially your square footage multiplied by the square foot cost for a contractor to rebuild it. Most areas, if you have basement, heavy insulation, you're going to be about $200 to $220 per square foot. If it's a higher end home, you're going to be $300-ish or $250 per square foot. If you're in some of those sunny states, it's going to be less expensive because it's just stucco. There's not a lot of insulation required. There's little things that need to be done. There's usually not a basement, just a concrete foundation. So the cost of that might be $180 per square foot. Understanding that your agent's going to work through that anyways, because it's not an option. The carrier has to calculate that for you, and each carrier does it differently. The second piece you want to make sure is when you're doing the replacement cost, if you agree with the replacement cost of your home, I always say do a little bit extra. In most cases, you can do an additional replacement cost. That's an actual coverage. And that can be 25% more, sometimes 50% more. And if you have a higher end home, you can buy a package that usually does 100%. So it doesn't even matter what the replacement cost of your house is. It's just replaced. If it's fixable, they fix the entire thing, no matter what the cost. If it's unfixable, they're going to rebuild the whole thing. Or in some cases, they'll just write you a check and say, here you go. If you're happy with that, you're good to go. You can walk away from the home or you can rebuild the home. It's really up to you at that point. The third piece is more so for those that are rebuilding their house. If you're doing construction, yeah, I get it. You don't want to tell the government that you just rebuilt your house because now there's extra cost of income tax because it's worth more. And so you may want to be like, okay, I don't want to say that. That being said, you always want to tell your insurance company when you've improved the home. They're not connected to the government and they're not telling them what your cost is or the value is of your house, but they might want an inspection if it's a higher value than what they think it is. If there's a lot of new materials, you now have granite countertops where you didn't before. Maybe you put wood flooring in where it was just carpet. Those little extra pieces aren't going to necessarily cost a ton, but knowing that your insurance isn't covering it properly, then you want to make sure you have that. That's also why I say do that 25% replacement cost or more in addition, because if you do have those upgrades, you don't have to think about it. It's usually something that's covered. They might want you to tell them about it, but in the end of the day, if you have proof of the value and they're already insuring that much, then most of the time they're going to cover that scenario. Number 5 is to inventory what you have. And I don't know anyone that does this, but I agree with it. I don't do it. There's apps out there that you can do inventory list. If you're really bored, inventory what you have. The way I tell people is what I would do is take a video of your home. Go around to the valuable items that you have. Hide the video on some Facebook page that's hidden. You can hide your own videos, whatever the case is, if you don't want people to see it. Put it on your cell phone, put it in the cloud. That way, if you do have a claim, you can show that video to the insurance if they question anything. Yeah, I did have that extra thing. It's right here. Here's a picture of it. Most of the time, people don't do it because they buy everything on credit now or some sort of digital currency, and that's trackable. So they can go back and say, yeah, it was a $3,000 TV, not a $200 TV. Here's the model number. Here's where I purchased it. Here's the cost. Having an inventory list more so gives you the peace of mind to know that if you have a claim, if you're getting paid correctly. Otherwise, you're just guessing. Number 6, to review your deductibles. Most people get this wrong, and most people that don't understand insurance just purchase whatever the agent gave them. Because of all the inflation, because of the rate increases we've seen over the last 3 years, agents are giving out higher deductibles. That's their way of giving you a cheaper price. And they're telling you, most agents aren't lying about it, at least the ones that I know. But most people don't understand it, so they're just like, yeah, sure, that sounds good. Here's what you want to look for. If you do a deductible, the most common is $1,000. I carry a little bit more. I think it's $2,500 if I'm not mistaken, because it lowered the cost that I pay. And I'm not going to file a claim unless it's more than $3,000. I'm probably not going to claim it if it's more than $5,000. Reason being is I don't want my rate to go up. If that's the case, I'll pay out of pocket, fix the repair myself. Some companies do what's called a deductible based on a percentage. So if it's a 1%, a 2%, a 5% deductible, look at what they're insuring your house for. Most common is 2%. That's usually something called wind and hail. We'll talk about that in a second. But the 2% deductible, if your house is a $300,000 house, $300,000 times 2% is $6,000 out of pocket. So you can't claim anything unless it's more than $6,000. That means if your roof blows off and there's wind and hail, like we just mentioned, that's a separate deductible. You have all perils, which is your home in general. Then you have the wind and hail deductible, which is the siding, the roof. If wind knocks over the house, hail comes down. If you have a 2% deductible on that, hopefully not a 5, because that's even way higher, your majority of the roof is not covered. That leads to the 7th or 8th, whatever we're on, which is the scheduling of your roof. There's 3 different ways that they look at your roof on a home insurance policy. The first one is at replacement cost. That's the most common. That's what I default to whenever I shop with somebody, and I want you to have everything covered. There's better replacement cost or full. That's also called matching with some companies. That means if your roof can't be replaced exactly the same, if the color's off, then they're just going to replace the whole thing at no extra cost to you. That's the better roof replacement or a matching. It can be siding too if the housing was yellow and it's 8-year-old siding, but now the color has faded a little bit because the sun's been on it and they put new siding on and it just looks weird. They're gonna just fully replace that. So that's very common for people to do as well. And then there's scheduled roof. And that scheduled roof is the older your roof is, the less they cover. And they'll usually tell you, there's usually a schedule that they show. When the roof is 5 years old, it's 80% recoverable. If it's 10 years old, then it's 50%. That means if you have a claim and it's that many years old and it's at 50%, you're only covered for half of the cost to replace the roof. The rest is on you along with your deductible. The 9th is to check for coverage gaps. The 9th is to check for coverage gaps. And coverage gaps means, do you have water backup? That's not typically covered on a policy. If water comes into the house that was supposed to go out of the house, that's a common issue for people to have. Different if there's a pipe bursting. I'll link a video that goes a little bit more in depth on some of that stuff, but that's really the big thing. Do you have the gap endorsement or an exclusion that you're not aware of? That's again where you have to get a little bit knowledgeable with the policy. Your agent should go in depth and just say, okay, is there anything I'm missing on this policy that you would carry? Most people, we recommend for older homes having service line coverage, and that's essentially an old pipe with the older homes from the house to the road. It's not typically covered, so it's one of those exclusions that you can add coverage for. If you have a trampoline, you gotta know that's a coverage that you need to add in some carriers. And then if you have a pool, make sure that they're aware of that. If you have dogs, there's all of these different exclusions that you're unfortunately required to be aware of. The agent is supposed to be able to help you through all that, but at the end of the day, an hour through a phone call, some things are going to get missed. And when you start working with the right agent, they usually default to what they carry. And what I personally carry is usually the better coverage. At the end of the day, we offer levels. So option 1, here's what I would carry in your scenario. Option 2, here's what I probably would lean towards if I needed to save some money. And option 3, if you just wanted a really good price, here's the coverages that we took off. Number 10 is flood coverage. That's really more people that need it. If you think you're in a flood zone, if you're by water that typically overflows, insurance doesn't cover flood on a current policy. You have to buy a separate policy called flood. It's as simple as that. Number 11 is the liability limits makes the biggest difference. That's where you're getting sued. If you're liable for something, friend comes over, they trip down the steps, there's not enough for their medical to cover, now they have to go after your insurance. It feels kind of sad because they're suing you technically. Your insurance is going to protect you and they're going to fight on your behalf. In that case, your friend is going to go after your liability policy. If there's not enough, that means they're going after your bank. And if you don't have any money in your bank, that's going to be a problem. You're going to have to go through litigation, through payment plans, through all those pieces. But if your agent gives you the right liability limits, then you might be covered enough. What most people carry is either $300,000 or $500,000. Anything beyond that, they go with an additional policy called an umbrella. Again, ask your agent if you want more advice on that. They're going to get a little bit more in depth. Number 12, ordinance of law. It's a very confusing piece. I've said this wrong a bunch of times in my history. I'm sorry for those people that I did tell you wrong. We fixed it later on, but it's happened. Ordinance of law is one of those coverages that is an older home-ish or can protect you on a newer. It's really every scenario, but usually purchased in an older home. It means that if the codes change, the laws, the way that you have to build your house, the regulations, then you don't have to pay the extra cost because insurance is not typically covering those additional costs. They're covering the rebuild of that style house. Then the codes changing are a cost that you're going to incur. And having the ordinance of law, it's usually a percentage, and most commonly 10% is the default. Some people want more because of the changes of the rules. If you think that your house was built uniquely, then that means that it's likely that rebuilding the house is going to be a lot more expensive, and you may want to up that coverage a little bit to protect yourself. Number 13 is combining your home and auto. You've heard it all over the place. If you read a website, if anyone talks about it, home and auto makes a difference, and it makes more of a difference now than it ever has. Most companies, at least your top tier companies, don't want just auto. They don't want just home. The risk of having those separate is too high. They've had too many claims with the individual lines of policies. They know that having them combined into one, it's a different type of client. And if you're that type of client, letting the agent at least look at that is going to be beneficial. You're going to save 30, sometimes over 40, even 60% on the home alone. On top of, you're going to save more on the auto if you're able to combine those together. Not always the case, because we have seen the rates increase the last few years, and some of the homes have gone crazy, but not the auto, and vice versa with different carriers. So that may have changed depending on that, but that's the agent's job. Let the insurance agent work on that, which is the last 13, is working with an independent agent. I'll skip this piece because it's really just working with someone that knows what they're doing. If your friend knows what they're doing, go to your friend. Go to someone you trust. If you don't have anyone that you're working with, I'll put a link in the description below where you can work with an independent agent that can shop multiple companies to find the best fit and the best coverage for you. Also, they're going to be able to answer your questions. So if they're knowledgeable, which in the description below, everyone that I've talked to has been knowledgeable, so that's going to be helpful. They're going to be able to work through those pieces and go over the coverages the way that you want them, not just based off of price. Let me know if I missed anything, what you think is super valuable on a home policy that people need to know about. Otherwise, like we said, you got to learn more about the home. I've got my Home Insurance 101 that's going to go a lot more in depth on the specific coverages that we just talked about. If you want to go even more in depth than that, like just give me the straight details, I've got a whole series on purchasing home insurance, the different coverages, A, B, C, D, all of those pieces that make up an insurance policy. I'm Mark with Think Insurance. I'll see you in the next one.